So after that day-long sessions of panels and keynotes and fireside chats, I'm sure some of you must be already thinking about your next big idea in mobile space. With that in mind, our next panel is going to be about where VCs are investing in mobility. To take us through the panel, please welcome Nitin Khanna. Nitin Khanna is the CEO of MergerTech. It's a boutique merger and acquisition firm for technology companies. Hopefully he has a panel full of VCs with checkbooks in their pocket.
The panel right now is for, I think, an extremely exciting panel. We've got some extremely exciting panelists on it that should be very, very appropriate for entrepreneurs here in the audience. We've got gentlemen from Samsung and AT&T, and then Gabriel Venture Partners, and also Storm Ventures. Where are VCs and enterprise companies investing today? So I'll kick off with the first question, then I'll let them introduce themselves as they answer the first question. And the first question is actually a takeoff on the very last question the previous panel was answering, which is the word mobile can cover a vast array of companies and technologies, including mobile apps, mobile services, mobile gaming, mobile security, mobile infrastructure, and so on. In fact, anything that IT used to do, you can add the word mobile in front of it. So I'll ask the panelists as their first questions, which part of mobile are you most interested in terms of investing? This is purely a panel about really focusing on where your investments are going. And so I'll kick it off with you, Stefan. Stefan's with Samsung.
Sure. So first of all, just very briefly introducing myself. As you can probably tell by my accent, I'm not Korean. And I'm with Samsung for a year and a half. And so by the amount of people we're hiring, I'm actually one of the older people being with Samsung here in the Silicon Valley. And before that, I spent many years here in the Silicon Valley with a German company, which I'm not going to name. And I'm sort of in between the finance side and the innovation side for my life. And about this year and a half ago, when I joined Samsung, I had the two questions to answer. One is to live in London or to live in Silicon Valley, and the second one was to become a CFO or to work on innovation. And that I'm here on the panel today basically gives you the answer how I decided. Before I get to your question, briefly about Samsung innovation, and Samsung is, as you know, and I won't get into any type of advertising, it's a pretty big company, and so you need to look at Samsung in like two pieces. One is the finished goods side or the device side, which is basically any device which has our name on it, and the other side is the component side. And what we're doing is focused on the finished good on the device side, and what we just started last year as an Open Innovation Center with basically 4 activities. The first one is an accelerator which is focusing on like internal startups, so to grow startups within Samsung. Second one is on merger and acquisition and acqui-hire. Third one on partnerships, and the fourth one is the one I'm representing on early stage investments. And we're investing in seed rounds, A rounds, B rounds, and getting to what's interesting for us now is, so we invest in software and services related to our device business, and the 5 areas we're looking into in the moment, these are the main areas, is context awareness and personalization. And it's really about the device understanding you and knowing your context and becoming an assistant without being asked. Second one is on the cross-platform, cross-device, which is looking at our ecosystem, is that you basically can have content on any device you want to and move it seamlessly over. Third is on content delivery, and it does not take too long time here for the rest of the panel. The third is big data. It's a huge topic for us, and the connection between mobile and big data, just like the device cloud would be an example. And last but not least, security and privacy is a huge area for us.
My name is Ryan Floyd. I'm a general partner at Storm Ventures. We started the firm about 13 years ago and focus on doing very early stage investing, in general and enterprise IT, but mobile is a very big focus for us. And I often tell people, there's very much defined period between before 2007 when the iPhone came out, when we frankly lost quite a bit of money, and then after 2007 when we've done much better. But we did have some early wins in mobile. There's a company called Airspace in the wireless LAN area that the team executed well and did well with. And recently now we've got quite a portfolio around mobile. On the security side, we have a company called Mobile Iron that does mobile device management, is a leader in that market space. There's a company called Accelerator that does enterprise mobile development. So if you're an enterprise and you're trying to build mobile applications, they make it a lot easier to do that. Another company called Splashtop that allows you to view any application on any mobile device, so you can extend your existing application infrastructure out to mobile devices, and several others. So we're very excited about mobile, and I think I look back over the last 13 years of investing, it's by far one of the more interesting trends just because it is so disruptive. If you just think about, how fast things have happened with the introduction of the iPhone in 2007, and now with mobile devices making up the majority of market share of connected devices, it's just changed everything for the enterprise.
I'm Rick Bolander, co-founder and general partner at Gabriel Venture Partners, and the same at Michigan eLab, 2 different funds. It's great to be back here at TiEcon. This is my 16th year here. I've been doing venture capital for 20 years, focused on early stage. Both of the funds I mentioned, Gabriel and Michigan eLab, focus on early stage. It's just, there's different types of VC models out there, but we focus very much, like Ryan does, on early stage investment. We also look for investments that are capital efficient and those that address disruptive technologies and disruptive business models. And so to that end, as it applies to mobile, we've been trying not to be too much in front of the curve, because that can be very painful from a capital intensity's point of view. But we try, and we're not market timers either, but what we try to find is where there's dislocations in the market to really make a difference and change the way people would work, live, or play. So I think Ryan framed it up very well when he said kind of pre-iPhone, post-iPhone, because there's a proliferation of smartphones and applications and low-cost access combined with the cheap data networks that came to be that allowed a whole different user experience. Prior to the iPhone, we focused on helping build the infrastructure. And we did deals like NextG that provided more ubiquitous access for cellular services in areas, metropolitan areas, and in areas that wouldn't, by zoning, allow easy access, such as like in Palo Alto. And so we invested in like the different performance BOM pieces of a mobile device, trying to decrease the power requirements and the efficiency and productivity. Those were investments kind of pre-iPhone. Post-iPhone, we've been looking a little bit more on how we can extend access, and not just purely access, but productivity improvements to the user. And we take a kind of a vertical approach to that rather than going more broad consumer on mobile apps, simply because mobile apps are very prolific and well-funded, but it's very difficult to kind of pick your spot on a predictable basis. It tends to be more of a hit business. And given that we're a smaller phone and we're trying to create a lot of alpha, we try to say to ourselves, what can we have a differentiated advantage for? And so therefore, we're looking at areas where we really disrupt the market. We picked 2, okay? One, mobile education, and second, mobile enterprise. And we really think there's opportunities to really change the world in these ways. I'll touch on mobile enterprise first. And by the way, there's a lot of other areas that are very profitable. Mobile gaming, for instance, has been very, very successful. Mobile advertising has been very successful. Those are not areas that we have focused on, in part because there's been so much capital that goes into those areas. It becomes difficult to survive on a capital efficient basis. So in mobile enterprise, it's not just about getting access to the enterprise applications. It's really kind of looking at redoing your workflows and creating a higher productivity for your field forces and other people in the organization who now don't want to just use the corporate device, but it's to bring your own device, which has become very, very prevalent in many companies. And so how do you have this disparate group of devices out there in an organization, enterprise, and give access to everyone having a similar user experience in a scalable, secure way? And I know that's very broad, and we can get into it more deeply, but that's one of the areas we see as a big challenge and pain point in organizations, and one that needs to be addressed very quickly. The second area is mobile education. I think most of the people here are probably very happy with their children and how they're doing in school, but a lot of people don't have the same access to education as many of you people do here in the audience. And so the ability to have quality access to education for our children is something that's very near and dear to our hearts, we're passionate about, and it's a pain point that needs to be solved. And so solutions and mobility to provide more of a democratization of education, to provide quality access, is one of our investment themes as well, and we have investments in those areas as well.
This is Abhi Ingle. I'll start with a brief introduction. I run AT&T's Global Innovation Program. We have innovation centers here in Palo Alto, in Dallas, in Ra'anana, in Israel, and then a couple other locations. We are building up new areas, including Internet of Things focused foundry. Couple quick things right before doing this. I actually worked on our mobile machine-to-machine business, which today is the largest machine-to-machine business globally, and also a business called Advanced Mobile Solutions, which actually built on a lot of the themes that are being talked about out here, which is business process mobilization is a very significant disruptor and cost driver. And in about 3 to 4 years, we built up a $500 million business out there very rapidly. In fact, working with some of the companies that, for example, Ryan's backed, like Mobile, where for the beginning, I think we were 65% of their channel sales and still a very healthy double digit in those dimensions. The theme of what we're looking for in terms of where we will place our investments and our partnerships are along kind of 3 dimensions. First, on the mobile network, there's still opportunities out there. We're looking at anything that can improve efficiency and throughput on the mobile network. So anything that has spectrum efficiency implications, 5 to 10% is numbers that run into the hundreds of millions of dollars. Second thing on the network, in the network theme again, is anything that improves quality. So anything that reduces drop calls, for example, is a significant opportunity to us. And within that network theme, the third theme is looking at efficiency of power utilization. Our power bills for running the network run into the hundreds of millions, if not billions of dollars. So anything that gives you even a 5-10% efficiency driver out there is a very large sum of money. You multiply that by 700 carriers around the world, and you're talking about large sums of money. The second theme that we are focused on is to do with the proliferation of devices and the opportunities it creates. So anything to do with manageability, security, data management. The second theme out there is applications that actually work across those disparate platforms. So mobile platform developments, Accelerator is one example. There are others in the marketplace. The other theme is specifically vertically focused companies that go after certain areas. So it might be power management software. It could be a software that goes after mobilization, for example, of field service technicians. It could be software that goes after education. We just made a big announcement, Udacity, which is a massively online MOOC learning program. The third theme that we focus on is on the machine-to-machine side. I mentioned before, in connected devices. We have a very large thrust out there. We have about 14 million devices that are not human beings actually connected to the network already. It ranges everything from essentially cars. So if you drive a Tesla, that's connected by us. If you're driving a John Deere tractor, that's connected by us. If you're shipping a refrigerated container anywhere in the world, that's connected by us today. But what we're looking for specifically is we've kind of nailed what we think is required to do quick, fast, rapid, global roaming. We've done that. We've solved that problem and getting the SIM up and running and the billing processes. But where there's opportunity still is on the application layer for machine to machine. It's a very, what I'll call early stage scenario where you're talking about very low level language protocols, lack of standardization, tremendous opportunity to build an app layer. Anything that simplifies putting data off, shipping it, writing applications on the data is very hot right now for us. And we're looking for companies that will assist in that area as well as build specifically vertical services. For example, let's say high dollar asset tracking that is FAA certified. Tremendous opportunities in those areas. So we're looking to invest in all of those areas across the board.
Great, thank you. I mean, if you're an entrepreneur looking to either start a company in mobile or have just started a company in mobile, I think that gives you a really good sense of where the investment dollars are going and what some of the value-added services are. There was almost $1 billion from VCs invested in mobile companies in Q3 of last year, almost $800 million in Q1 of last year. So certainly the money is flowing to mobile companies, and almost 30% of the money that went in Q1 of this year was in mobile security. You talked, Ryan, a little bit about the investments you made in Mobile Iron and Accelerator. Stefan, how about you guys? What are some of the one or two concrete investments you made recently where you've put money to work?
Sure. So actually, the first company which comes to my mind is related to Accelerator to some extent. It's actually a company converting, and I can't mention the name, but they're converting iOS apps into Android and other platforms. And they do that actually using binary of the app, which is quite amazing. So you don't touch the app, which is for developers really interesting. And one thing which is from our point of view fascinating is that if you look at enterprise customer, they have like hundreds of apps or even sometimes thousands of apps. So if you take I think I heard a number that JP Morgan has 1,600 apps on iOS, and now to get these apps on other platforms is just a tremendous value if you want to look into solution sales. To move away into the big data space, we have in my opinion, very exciting company there. We invested in October last year, and they do speed up big data algorithms. And we would ask for why is that relevant for mobile, but we think there's a lot of applications for mobile. We can talk about that maybe a little more, where big data plays a role. But we look at it, for example, for speeding up recommendations. It's one possibility. But we have also other areas we will keep them engaged. Those are two companies I'm very excited of.
Abhi, how about for AT&T?
Sure. I'll give you one of the themes that I mentioned before. On the network side, we work with a company called Indus, does self-optimizing networks for mobile, so improves the efficiency of our network in terms of utilization by doing very rapid optimization between tower handoffs, and also reduces drop calls, which after the smartphones came out with super fast signaling, caused a lot of problems for us. And this company reduced our drop calls by about 10%, increased our efficiency by a meaningful percentage, and they and us did very well. Cisco just bought them a few months ago for $475 million. And there's only $30 million of VC money in there, so they did very well. That was one example. Another example is on the machine-to-machine side. I told you that some of the problems that we're working on we solved them. We worked with a couple of companies. We're working with a company called Jasper Wireless. It's actually in the Bay Area. And we are also working with some early stage companies in the asset tracking area, which at this point I prefer not to mention.
Rick, how about you? Maybe one in mobile education and one in mobile enterprise?
Sure. Mobile enterprise. People are trying, especially with this theme of bring your own device that you're seeing in companies where they'll give you a subsidy and whatever device you want, you bring it in and it cooks the network. There's all kinds of security and integration concerns with this, right? And a company has the options of either kind of going with an outside integrator, like an SAP or whatever, to integrate it, build something within, or to outsource it. Well, company we've invested in is PhoneMine, which basically looks at the problem not just from an access point of view, but actually a workflow point of view. So for instance, General Motors, with all their locations around the world, is trying to support on an IT basis everyone, and whether it's like someone needs a server, someone needs some equipment, someone needs support, it comes into a centralized location and they have to divvy it up. It's all done manually now, and people in the field and other places are bringing it in from all different type of systems. To integrate it and unify it with the UI on any kind of device, PhoneMine will come in, and they already have plugins for most, like 90% of the devices. And within a few days, they can take the systems that already are in place and integrate it in a workflow that's very easy, reducing the response time by up to 80%. And so that's just a productivity cruncher. I mean, it's just a no-brainer. So that's one. And the second, in the mobile education space, is a company that's not as new, which is Chegg, which rents college textbooks to save money for students. But it's the application of mobile that they're doing that is pretty profound. If you have any kids in college, you know that the cost of higher education is just astronomical. And there's questions of whether there's the right ROI on it, and even some venture capitalists are paying people not to go to college. I personally think college is a good thing, but how do you get college educated is important. And you can't get educated if you don't get access because it's too expensive. And what Chegg has decided to do with their mobile strategy, which is a very big part of their growth, is to standardize on an HTML5 as opposed to this notion around downloading everything to your device, but staying online. Because as we look more and more, and I think that's a premise around this whole panel, how does the pervasiveness of mobile reach out? We have a thesis that it is going to be very pervasive wherever you go, okay? And by doing so, if you're looking at your book online and you have a question, a paragraph, you can easily go to a study group, or you can access a tutor, or you can get homework help online, very contextually pertinent to what you're looking at that point in time, which is somewhat kind of revolutionary. So no matter where you are, whether you're in the library or in the dorm or in your fraternity sorority or out in wherever, you can get this help being online. And that kind of changes very much the way people will approach education, because the pedagogy will shift from having to download and memorize all this content, which is always online, so why bother, to how do you process information? How do you become innovative with information? How do you apply information? How do you collaborate around information? And so I think that's a huge disruptive shift. One other just real quick one is Kajit is a company that's trying to help kids, especially in high school, middle school, get access with the pedagogy more like Khan, where the content in terms of the basics you can get online through different courses, but to get help with homework or problem areas, you want to have interaction with your teacher, and they provide a very controlled environment to do that in a way that you can subsidize through your school or the local government or whatever.
Great. One of the questions that entrepreneurs always have when they're looking for investments is what the investors are looking at from a team standpoint. Ryan, given that you divided the world into the pre-iPhone and post-iPhone, it's mobile's a relatively recent phenomenon, yet it's exploding. Are you looking for any specific talents in the team, in the founding team, that may be different for mobile than for other investments you make?
I don't know if there's anything specific for mobile, but I would say in general for teams, there's two things that are critically important for us. Number one is asking, is this the right team to go execute the problem? So if you're building, let's just say, a mobile app for, field sales, which is, to come with a hypothetical example, and the team has no experience in field sales, that's probably going to be a difficult market to crack for that team. And then I think the second question we look at, beyond mobile, mobile's sort of a very big, broad term, talks about, every market, enterprise market's kind of touched by mobile. The question is, what market is that team going after? So I'd say those are really the two things.
Stefan, how about you? At the enterprise level, what are you looking for in the team you invest in?
I would kind of hijack that question a little bit. And
sure.
So we're actually looking also very much for hiring people for our Open Innovation Center in the moment. So maybe I'm answering the question direction, what we're looking there. We look for people with venture and corporate venture experience to combine with investment in the software and service domain. But on the startup side, it's already, what you just said is pretty much what we're looking forward to.
One of the things we at MergerTech are seeing on the exit side are that the valuations for mobile companies are extremely high. I mean, Abhi, you just talked about an acquisition of 475 for 30 million in. I imagine that was a very short turnaround as well, not just that the money was not large relative to the exit. How are you guys seeing valuations for mobile companies? Are they high, and what do you feel about that? Rick, if you'd like to start.
Valuations, depending on the segment, are high. Like I mentioned earlier, mobile advertising, mobile gaming are quite high. I don't think all areas are high. And you could ask the question then to follow up, are they justified? I cased, obviously recently where Zynga marked down their acquisition, OMG. You would say, well, maybe they're not so high. Maybe the beauty is in the eye of the beholder, and maybe that changes. I think we're in a market that's somewhat high growth with a lot of uncertainty, and I think you see higher, I would say on a relative basis, higher valuations than you do in other sectors, and for two reasons. One, there's huge growth, and the market opportunity is amazing. We've talked about different problems that need to be solved on this panel so far, and the market opportunities are very rich to displace existing markets with new way of doing things with mobile technology. And because of that, there's an amazing growth opportunity. that companies want to get access to. And I would say there's a second driver, and that is mobile is fairly new. And it looks like we're going to be having some extra speakers to the panel here. The talent around mobile is fairly fresh when we're talking about non-infrastructure. In building out networks, yes, there is a lot of existing talent, trained talent. But talent as it relates to these new areas that we're talking about, I think larger companies who are looking for growth are not only looking for acquiring a company that can give them access to that market, they're also looking for the talent that comes with those companies because they don't have it inside and they don't want to develop it organically, or they can't develop it organically. And I think these two factors really drive the higher valuations. And so the higher valuations about these larger companies searching for growth and searching for talent can be very justified. I can't really comment on like billion-dollar valuations of Instagram and all, but the consumer market is a world of its own. But I do think that these valuations are here for a while yet to come.
I know people think that I talk a lot, but that's the first time, that's the most interesting way that I've been told my time is up so far. Abhi, any views? I mean, you clearly, paid a good price, but you must have felt you were justified in paying that price. What are your views and valuations here?
As a company, we voted, right? We are all in on mobile. Okay, over the last 10 years, we've changed 70% of our revenues, and we're a $127 billion company. Okay, we're getting over $50 billion mobile right now. So we are all in from this perspective. Our perspective is that the combination of mobile and cloud changes just about everything there is right now. So if you look at it in the long run, we think this is a bigger change, far bigger change than moving from mainframe to PC. And if you believe that, and you believe that it's going to change the entire IT industry, you're talking about a couple $1 trillion in play at this point in time. So I think it's a very, very large trend. I believe in the second innings, not even in the third or fourth innings out here. But you have to be buyer beware because the cost of starting up a company is so significantly reduced right now. We see a lot of Me Too companies in space that have been sold over and over and over and over again. So I think people, you just need to be careful about where you're investing. And when you're coming in, I like what Ryan said earlier about if you're going to go into a domain-specific area, by God's sake, have somebody on the domain team who understands. You're going to go and reinvent insurance, have somebody on your team who understands insurance. And if you're going to come and pitch one of us, try to understand what we're looking for. I don't want to have somebody who comes in and starts telling me on machine to machine, they got 5 minutes with me and they spend the first 5 minutes telling me that machine to machine is a big opportunity. I'm like, thank you very much, right? So I think it's about focus.
Well, I think what the panel's trying to say is that all of you made a very wise decision to sit in on the mobility panel today instead of the other one. So I've been given the 1 minute signal. If somebody has a great question to ask, I'm happy to take a question from the audience. If there's something you want to ask the panelists. Anybody? There we go.
Yeah, hello. In the mobile space and especially in the mobile app space, when entrepreneurs come to you and they are pitching their business and things like that, what is the minimum traction that you're looking for before you take a decision of putting money, the seed money into them? Because many times, people are saying, okay, 100,000 registration is the minimum and things like that. So I just wanted to get your views. Thank you.
Ryan, do you want to take that first?
It's a very hard question to answer. I think everybody would probably agree with me. I wish there was a simple answer. I get asked that question all the time. And I'd like to have an answer. If you had A, B, and C, that's what it takes. I think it depends a lot on the team. So if it's an unproven team, it's great to see a little bit more validation. If it's an unknown market, it's great to see a little bit more customer interest. I think at a minimum, having a few lighthouse teaching customers kind of idea, people that have confirmed your product service idea is a bare minimum. We can go out and validate it ourselves, but we want to know that the entrepreneurs and the team themselves can seek out, because if they know the domain space, they ought to be able to get in front of enough customers to validate it themselves. So that's probably the best answer I can give to a minimum.
I think it also depends on the business model. You're talking consumer app versus enterprise app. It's very, very different, obviously. In a consumer app, if you're going with a business model that's an advertising model, and the size of companies that we need to make it worth our while in terms of what they need to grow into, a good starting point would be over 1 million subs.
Well, great. Well, thank you again for all of you, for your time. I see the wine and beers being poured right out there, so I think it's time to head out.